StacyLynn Shriver, and I've got two other loan officers that have popped on the call, and I'm going to introduce them. And before I do that, I know people get on the Keys to Homeownership call because they're looking for answers and direction on what the process looks like. And then sometimes people get on the call because they were looking for a realtor or looking for the right lender. And our job today, from a lender's perspective, is just to take the mystery out of home buying. You know, it's a system and it's a process, and it does involve professionalism and licensed people and all of those things. For me, it's been an interesting June. And as I introduced these two gentlemen that are part of the same team, they're going to help participate a lot in this call, in case I need to put myself on mute or stand up. The first person I want to introduce, out of Lufkin, Texas, and he is just, I can't even tell you how great he's been doing. He is just taking names and getting them to the closing table. And his name is Philip Price, and he's in Lufkin, Texas. And you want to say anything, Philip?
Sure. Thank you, Stacy. Can you hear me?
Yes.
Okay, great. Well, thank you for introducing me. Yes, my name is Philip Price. I'm a mortgage lender in Lufkin, Texas, and branch manager over here. I've been in the mortgage business, I think, 18 years. So I've been through some ups and downs, and great to be a part of Highlands, great to be a part of this team. And I feel that we're able to give a combined effort to help many people go from a prospective interested home buyer to a home buyer. So we have many loan programs, and we're going to talk a little bit about that today. We have a great team. Tanya is our loan officer assistant, and she's helping. She's on the call also. We're going to talk a little bit with her, and we're going to talk about some different programs to help you. So you feel free to reach out to us if you have questions. Go to the chat, and let's see what we can do to help you. So
Right.
Yes.
The next person I want to introduce is a great, unbelievable loan officer and caregiver. But is currently in our Flower Mound office today, but goes back and forth between there and League City. For people that are from the Houston area, he's in the BNI chapter in Pearland, and has a house in League City, and he also happens to be my husband. So has been Sinclair. So Carita will tell you, Carita Loftus is on here, who's known us for 100 years and was at our wedding. She witnessed it. It's Carita will tell you that she tells people that she gets two for the price of one, two brains for the price of one. So I'm not sure if that's great. Now, I will say, since I was talking to Latasha earlier, he is a TCU graduate. I'm a UT Arlington graduate, and he graduated from TCU because he had more money than me. So I'm just saying. But as we get started, and I don't really see, I saw some people trying to log in, but then they faded away. So I'll keep up mindful of that. But as we get started, Keys to Homeownership, you can see me, Ben, and Philip. We were celebrating it. Philip has been awarded and nominated for a lot of different things in his neck of the woods, and our team too, just in general. We all have to have people to help us navigate these waters. And again, I know Philip mentioned Tanya, and you see Tanya's picture here. Her camera for some reason isn't working, but she also helps us to just, keep a steady transaction flow. And I like to talk about this quote: real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world. And that was Franklin D. Roosevelt. And, I love doing these classes because it allows us to kind of showcase a little bit about our team. We've all had, experience, with Philip. Prior to being a loan officer, he was also an appraiser, and you'll hear about lots of different things that you need an appraisal of value, for a home. We have experience with conventional VA, FHA, jumbo loans, first-time home buyers. We love first-time home buyers. We love to educate. Philip educates there in East Texas. He was at the Nacogdoches lunch today, visiting and educating. We love seasoned home buyers. We've served, all of us here have served both banks and mortgage companies. Ben worked for many years on the credit union side, so he's seen various scenarios in different places in his lifetime. We've got awarded, like I said, Best of Denton County. Later, I'm going to share a link with y'all. And if I could be so humble to ask for a Best of Denton County nomination, you can nominate from anywhere. You don't have to be in Denton County. And we're all licensed, and we can help Texas, Oklahoma, Arkansas, Florida, or Louisiana. So if you have a customer and you're doing their listing and they're buying in one of those states, then we may have a partnership with a realtor there where you can get a referral fee if you're a realtor. So just keep that in mind. And then we can also take care of the loan. I always talk about where does your story start? And everybody's story with home ownership is very different. One of the stories that I love is, I like to talk about my story, and I'm going to let Ben talk about his story in just a second. But the picture on here is my house in Arlington, Texas, that I grew up in on Westview Terrace. And Latasha's already laughing because she knows. But I grew up in this house, and my parents rented my childhood home for 19 years. And they didn't rent it because they couldn't make a monthly payment. They just didn't understand really the process and the process of maybe saving for a down payment. They just didn't fully get that. And they weren't given the opportunity from the owner to buy it, even though they tried. So I talk about that because in real life time, that's about $497,000 in rent. And rent is not tax deductible. When you own a home, the interest on the loan and your property taxes are tax deductible. Rent is 100% not tax deductible. So I always share that picture. The middle picture is my grandfather, Donald Shriver, who was from, as I knew him to be growing up, from Waco, Texas. And he fought in World War II. And he came back and he built a life with my grandma in Massachusetts at first. And then they got to Texas as fast as they could after that. My dad was about 7 years old when they moved to Lubbock, Texas, of all places. And, he fought for our country and then came back, built a life, and became a school teacher for many years. And then on the far right is me and Ben, our son Zachary, who, when he got out of A school at the Navy, and then our daughter Landry, who's 12. And that is a very old picture because I think she's grown like 3 feet this summer. So, and then on the bottom, there is Ben and his dad, and I'm going to let him speak on that. And then you see Philip and his wife Kelly and their son Rhett, and who's also served. And we love VA loans. You'll hear us talk a lot about that. And then I will ask you to kind of talk about your story. My story was a story of trying to figure out home ownership. And then the canvas of my life ended me up here in an opportunity to educate and be a lender and be on the front lines of several different great opportunities. And through the years, Karita, who's on this call, we have sat at closing tables where people had been told no, and we figured out a way to get it done. And so, we love that. And Ben, if you'll talk a little bit about your mom and dad and their service.
Yeah, I'm a product of home ownership. Everywhere as far back as I can remember, we always owned a home, and we moved around. Dad was a sailor. He was in the Navy. I always say I wouldn't be here if it wasn't for the Navy, because my mom was a nurse in the Navy, and that's where they met. And that's how you get East Texas and Massachusetts together. But the quickest, and I believe this, the quickest, easiest way to build wealth is just buy a house. You're paying rent anyway. You might as well be able, building some equity for yourself. I bought my first house in 1999. I still own it today. It's tripled in value, and that youngster in the bottom right on the left is currently renting that house. He pays rent, plus I wrote yard work into the lease, so I get a little lawn mowing out of him as well. But there's nothing better than first-time home buyers. I like them all. but the grin on a first-time home buyer's face. I closed one recently that, you know, they were about to have their first kid. They got their first house, and, you know, they're set up to build some wealth. They don't even know it yet. You'll just look up one day and you'll have 6 figures worth of equity in your home. You know, real estate is not guaranteed to go up, but as many people who are moving to Texas, I think it's about the best investment you can make. And I've enjoyed all the people I've met, and I've fed my family doing loans for the better part of, I don't even want to tell you how long, because I don't know if I can do that math at the end of the day, but I started in 1996. So, you know, somebody of the people on this call, if you can get a loan, there's somebody on this call that can figure it out for you.
I love it. So the next thing that we would like to talk about, we usually have like special guests, you know, each month to talk about various things. And this month, what I wanted to do is just showcase any realtors that are on the call and at least speak to why you need a realtor. Notwithstanding these great pictures of different people that we've closed, at the bottom there is a veteran that, man, earlier this year, that was an incredible closing. And the realtor there, Sherry Adams, was also just incredible to work with. And, you know, Phillips had several closings, and where the whole family was there. And that is a picture of Ben with a closing earlier this month. And the reason why I featured that picture is that we have closed a lot of loans like in the last 6 weeks. And there's been about 3, maybe 4 situations where there was no realtor on either side. And I cannot express to you why it is important to have representation as you're entering into a binding contract. I mean, there's a lot of information swirling around about real estate and real estate agents. And how many of us have realized that you now, it seems like you can go to YouTube for every question you have, right? But even if you go to YouTube and you look up heart surgery and they show you how to do it, that doesn't mean you can do it on yourself. And you're not doing it on me just by reading that, right? And it's the same thing with real estate. You've got to, you have to work with someone who's licensed, who can help you navigate the water. And they help find the home. They have the inside scoop on the latest listings. They help you stay objective. It's an emotional decision when you're purchasing a home, and you've got to stay objective. They explain each part of the contract, or they should be. They do the negotiations for you. They schedule and guide you through property inspections. That's another thing you have to do. And they communicate with the seller's agents, the title company, and the lender. And I just want to say, and I'm just going to let Philip and Ben just speak briefly. Like I said, this is our guest talking about why you need a realtor, how challenging it can be when you don't have one.
Well, my 2 cents on that is I've done a lot of transactions over the years, and the worst ones, not because of the people involved, but just because of the lack of expertise, don't have real estate agents. And you know, and Stacy and Philip and I, we know how to fill out a contract kind of, but we're not licensed to do that. And we can jeopardize our mortgage license. So we're not going to do it. You know, we'll answer general questions, but it's just like Stacy said, you need a professional. You need somebody to take the emotion out of it for you. You need somebody to negotiate for you. You need an advocate when you're buying a house. It's the biggest purchase most people are ever going to make. And like I said, through the years, when we see one coming, we'll do it. But that doesn't have agents, we know it's going to be difficult. You know, little things are going to get missed. Buyers are going to end up paying for stuff they probably don't have to pay for. There's just, you know, I think when you have an agent, it actually saves you money. It doesn't cost you money. I think it saves you money on the listing and the buyer side. That's my 2 cents. I mean, get a real estate agent. We know a bunch of them all over the state. If you needed a referral, we could help you with that. And that's my 2 cents on why you need a realtor.
Great. Philip, you got something?
Yeah, I totally agree with Ben. I've been in these situations, and it's like you get reeled in. I mean, like the client, you know, oh, I'll take care of it. I'll write the contract, but they don't know what they're doing. They don't fill it out right. And then, you know, no one else knows how to do it, but you know how to do it, but you can't legally fill it out. So it becomes this clustered problem, and no one is navigating the process unless you step in and do it. And I'm not a realtor. That's not my role, so
We're not licensed to do that. It's not our lane.
yeah, I can't act as a realtor, and I'm actually having to step out of my comfort zone whenever we don't have a realtor on the transaction, and because the borrower is really not knowing how to navigate the process, and we get very frustrated, and there's stuff missing, and there's problems, and stuff doesn't happen on a timely manner. So anyway, we love to have realtors involved in the transaction, and we encourage the customer to use a realtor whenever they come to us without one. Definitely so. Yeah.
Thank you for your input there. The last thing I would say, and just to kind of talk a little bit about what Ben said, is I think in our lifetime, we've all heard people say you get what you pay for. And that's the thing is that you think by not using someone, you're going to actually save money. And sometimes there's just certain things about, like your house, for example, when you start to own a home, if you've got an electrical problem, you're probably not going to be the person that needs to solve it if you're not an electrician, because it could be harmful to your health, right? Same thing on the real estate side. So as we navigate the rest of this, why buy? I hear that, why should I do it right now? And Ben kind of touched on that. The affordability factor. You may be able to purchase for what you pay in monthly rent. Investment versus expense. Increase wealth by building equity. Fixed payments, unlike rent, can go up every year. If you have a fixed rate mortgage, your payments will be consistent. Your principal and interest, if it's it's a fixed rate, you can, and we do mostly 30-year fixed. We do some 15-year fixed, but that's a fixed rate. And so that principal and interest remains the same. There are tax advantages, like I mentioned earlier, with tax deductions, and the freedom that you can make your home how you want it to be and upgrade it to suit your lifestyle. That I hear this a lot where people are like, well, maybe I should wait. Maybe the values aren't as good as they were. Maybe I should wait. And I love this screen because I love this example, because the change in home value over 10 years, purchasing a home and holding it for 10 years has resulted in a profit every year except one since 1942. And this is an example per $100,000 in value. Every single one. 2006 is the only year in this example where something didn't increase in value, and that's it. And that lack of increase was only 3%. And so we're blessed to be in Texas because our values hold, and things increase in value. And, we don't want to harp on this too much, but I always want to talk about the buy versus rent comparison. And it talks about year 9. This is an example of Denton, Texas, and a purchase price of $465,000. And this just tells you, like, the first couple of years you own, there isn't much gain, right? Because you're paying mostly interest. And then after you get out of the way in the first couple of years, you're paying into your principal, and then the equity should increase. And if you've had good realtor advice, then you'll be buying right. Now, I always say this about purchasing. We deal with a lot of young people, and a lot of young people want to live as if their parents, they want to move into a home that was just like what they were just in with their parents. And your parents didn't live like that when they were 22, And so sometimes we have to make gains. We purchase something, we hold it for a couple of years. Then, we move up from there. We upgrade after that. Karita's had several examples where people bought one thing, and then later, 5 years later, they bought something else. And she herself invested in a property. And I laughed when Ben talked about his son renting, because I was thinking about Andrew. And so, so you have to crawl before you walk and walk before you run. And so over time, this explains to you the net gain by owning a home in this example. The net gain, that $120,995, the appreciation gain, and the cash flow difference. You can have the same what your monthly rent and then what your ownership can be very similar, but yet you're having a tax deduction for the other. And this one is similar to that. This just talks about total rent over the course of 9 years with an annual rent increase. How many of us realize rent increases happen every year? It's crazy. The rent increases are just absolutely crazy. And so you want to be cognizant of those rent increases and in relationship to the fact that if you can buy, the total buying talks about the difference right there, 459, 576, and that's with a 7.25% interest rate. We had a loan closing today at 330, and his interest rate was 6.99 because he had a really good loan officer. Just saying. So you have to time it right. We watch the market every day. Me, Philip, and Ben watch MBS Highway every single day. So we watch the market every day, and we try to, time it as best we can to find the best advantage for the customer and the interest rate. And then Texas home buyers and sellers. This is a report. It's from 2022. A new one's come out, but I get this question all the time. Am I too old to buy? Is it too late? Have I missed the moment? The median age of a home buyer in Texas in 2022, it was 47 years old. Now, after 2023, it's 49 years old. So the answer to that question is no, you're not. And my parents didn't buy their first home and only home that they've owned until they were late in life. And my mom is 84 years old, and she still lives in that same house that we purchased in Flower Mound, Texas. And she's 84 years old. And I just want to tell you, we purchased that house and I helped negotiate that and did the loan. And we purchased that house for $159,000. How many of you realize that her house, of which we've remodeled a couple of times, and now she has granite countertops, and anybody that she's known on a bus for more than 5 minutes also knows she has granite countertops. How many of you realize that has increased in value? I mean, 159,000, you can't find anything in Flower Mound for 159,000. And so, it's literally, I believe, if I was doing my math, I think it's tripled in value as well. So 32% are first-time home buyers. I share some of this information because I want real estate agents also to figure out who to market to. In the United States, the median age is 45 years old. 82% of buyers bought single family homes. That's something that that's important to know. 15% purchased a new home. So that means that existing homes are being bought. I'm going to kind of get into some product knowledge, and I'm probably going to call on Philip and Ben to talk a little bit about some of these examples. But, there's a lot of homes that may need a facelift, right? It's in the best lot, or it's the best location for schools, but maybe the kitchen, you just can't live with the kitchen. Well, that's something we can solve. And we have products called an FHA 203K, which allows up to $35,000 in total renovation. There's no structural repairs with that type of loan. It's all cosmetic. But if you find the perfect schools and the perfect lot, why pass on it if you have an opportunity for a lender that can create a renovation loan and not take a long time to do it, still close within a 30, 45 day window, and get the kitchen of your dreams, or maybe something with the backyard. Maybe it doesn't have a sprinkler system. It's all cosmetic in this example, but that's something you could be able to do. And Philip had a loan where he did an escrow holdback, and I would like for you to speak on that, how much that escrow holdback was, and just what the nature of the repairs and how we handled it as a company.
Well, it turned out surprisingly well. There was an issue. I think it all kind of started with the insurance company of some things that needed to be done based on a home inspection in order for them to insure the property. And, one thing led to another. We ended up doing an escrow holdback for, I think it was around $7,500, needing to get certain things replaced. And we closed. The seller was willing to agree to this, and it took about a month for those repairs to get done. But after that was over, we got it We got the contractor funded, and it was all done. It was all done. And, fortunately, it worked out great. The seller had a transaction behind this transaction. So, there was, and that happens a lot today. There's a transaction behind this transaction. So many other lenders would have just shut that deal down when we can't do this because of this problem. And sometimes it's driven by the appraisal, too. So we can do escrow holdbacks, and we're going to do whatever we need to do to make that deal happen if it's within reach.
And not miss the close date, right?
Yes,
That in that example, not miss the close
yes.
date.
Mhm.
Yeah, so
Yeah.
great. And I don't remember what they said, but they had up to 6 months to get all that stuff done. It didn't take like that long, but still, after you closed.
I don't think it was quite that long, but I think it might have been 60 days, but we pushed them along.
Okay. Yeah.
We pushed them along. Yeah.
We pushed them along. That's good. I love that. So this just talks a little bit about what is renovation finance. And I won't spend a ton of time on here, but regular loans, FHA loans, conventional loans, those are traditional loans. And if you have a renovation rider, for a purchase or a refinance, it's just an additional rider. We're not inventing a new loan. FHA, VA, USDA, and most commonly, the renovation rider is on conventional loans. To Philip's point, it's additional funds. It's a single transaction. There's not multiple transactions. There's a single transaction. We do this on primary purchases, second homes, and investment properties. Appraisal is based on the improved property value, subject to appraisal. It's a subject to appraisal, and then we go back for final. Improvements are made in this example, just like what Philip was talking about, after closing. So you can close now and renovate later. And again, this slide speaks to the fact that there are 24 million homes in the United States that are really needing some renovation. And so that speaks to the fact that you can purchase something that maybe just needs a little bit of lipstick and have a phenomenal opportunity. I mean, I was talking to a customer today who is listing his home, and because he has to move, he's cutting the price. And even though there needs to be updates, but we've all heard that phrase, diamond in the rough. I mean, when my husband found me, I was a diamond in the rough, so, it can all happen. And that's true about home ownership too. This just talks about 2 or 3K standard is a different type of renovation loan. And I like my little animated feature of Chip Gaines almost killing himself here. Structural repairs on an FHA standard, structural repairs are okay. This gets a little more involved. If I were a first-time home buyer, I'm not sure that I would go to an FHA standard. I think that if as a first-time home buyer, I would try to find something that just needs minimal repairs and not structural repairs like foundation. There's no limit of the amount of reno. You just have to stay within the FHA loan limits. A HUD consultant is required. So that's a little layer of added things. And there may be some mandatory repairs that consultant will require. So the more layers of complication, people want things done really quickly. And sometimes people that do repairs don't work that fast, but that we do have this option. And then we have a conventional home style renovation. That it even allows for a complete tear down but you have to stay on the same concrete pad. This would also include luxury items. If you wanted to buy something and build a pool or have an outdoor kitchen, something like that, and the complete new construction, with 90% completion, and you have to stay within the Fannie Mae loan limit. And it's not a jumbo loan, and the loan limit for that is $766,550. I want to speak a little bit, or have Philip speak a little bit, on how does a one-time close work. We do one-time closes. This is probably not something that a first-time home buyer would necessarily do, but a lot of times people are looking for a one-time close, and he's had one recently, so I'll just let you speak to that.
I sure did. And we even did this on a property that was completely out of our area. I'm in Lufkin, Texas, deep East Texas, and I did this in Lubbock. So we're not tied to just being in our county or in the adjacent county.
Do it all over.
We can do
Right.
this anywhere that we're licensed. And so, keep in mind that we can do it outside of our own backyard. So one-time closed construction loan, we used to get asked a lot, do you do construction loans? It's kind of backed up a little bit, but with that said, I mean, so many people want to build a custom home. They don't know the steps. They don't know the process. They feel intimidated on what to do. And, we just try to give them the overview. Basically, you just, go get your builder's bid. And, either they own the land already or they haven't. And we can deal with that either way. If they own the land already, that can serve as equity towards their loan to value on how we calculate their down payment if needed. If they don't own the land and they're buying it, we can purchase the land at the time of closing. And then they can get into this home with a small down payment still. I mean, 5% down conventional. So I don't know about you guys, but on construction world, I mean, I always hear 20% down needed for doing a construction loan, and it's a 2-time close, which means additional closing cost. So this is a really good product. Realtors, those of you that have a client that's buying land to build on, you need to let them know about this, because a lot of people don't know that this product is out there. It's a really good loan product, and there is some layers to it, but we can work through it and get them to the finish line.
Great job. So let's talk a little bit about your credit score and the makeup of what makes a credit score. The payment history is crucial. I can't say enough about payment history. When the best predictor of the future is the past, and if your payment history is late, then that's going to be an issue. Tanya and I looked at a loan today, and she had a 1 times late on our mortgage in the last 12 months. Less than 12 months, 1 time late. And that's challenging, right? Because we were looking to purchase a new and get a new mortgage, and we're lending, and it doesn't matter if it's $100,000 or $1 million. The best predictor of the future is the past. So 35% of your payment history is very important. I visited with someone else that was late on the car payment, and the only thing that I can say of all the credit is that when we talk to people on the phone, we don't want to get credit pull happy with anyone. We want to give them the best advice. And those are when someone tells us, hey, I think that my credit might not be perfect, I'll ask the question, what makes you think that? Like, what is it that makes you think that? And sometimes it may be as simple as, well, I paid a utility bill late. Well, we don't care about that. That's not a big deal. But if somebody says, well, I'm behind on my car payment, well, that's a big deal, And so what I always recommend to people is we're happy to look at a loan anytime, any place, no matter what. But if you have current payments already in the rears, and I say this to realtors, when you are visiting with a customer and you're riding around and they start telling you their business, then they need to be pre-qualified in advance so that your time is not for naught, right? And so that's very, very important. But amounts that you owe, length of credit history, new credit, type of credit that is used. And I just want Ben to speak to what he did for Zachary to help gain his credit score. Like when it talks about length of credit history and it talks about that stuff, to explain a little bit about what you did in that instance.
Well, he was, it's hard for young people to get credit. You got to have some to get some. You're chasing your tail kind of situation. And he was a good kid. He was doing well. So his senior year, I bought him a little Ford Ranger, and I went down to the credit union, and they ran his credit. They said, well, we can't put him on the loan, because he doesn't have a credit score. And I'm like, well, how's he going to get one? Anyway, I talked him into it and put him on the credit score. And the deal was, as long as you're going to school, I'll cover you. You got to work in the summer and help out. But if you're going to get education, I'll help you out. Well, he was a 2020 grad. He graduated, the COVID year, didn't really finish high school. He just kind of finished with his computer, went to North Texas, did well. But just, it wasn't happening for him. He joined the Navy. He got out of A school and everything. He's now in the reserves, but he didn't go back to college. And I said, well, man, the deal was I would pay for everything as long as you're going to school. Now you're going to be a big man. Then here's your car payment, your insurance, all that stuff. And he went down to Navy Federal, and they refinanced his truck into his name only. He had like a 715 credit score, gave him a credit card, and all that was from that one piece of credit that I gave him. So you really need two revolving accounts and one installment to get your score going. But
one quick point: if you decide you're going to make a child an authorized user, you are in charge of paying the bill. Don't make someone an authorized user and then just not be in control of the payment. Does that make sense? And Ben was in that instance.
And we can, most people, if they listen to us, we can get them a score anywhere from 3 to 6 months. So just because somebody doesn't have a score, sometimes quicker. I always say if there's a commitment to buy a home, get with somebody knowledgeable, and they can get you there inside of a year for sure. But you can get a credit score pretty quick. And we've got some good professionals in that area that will refer some people to as well.
Yeah. And Tanya, in the chat, if you see the chat, can you put in Amy's information? We use the Rising Point Solutions. If you can't find it, just so FICO scores, this is what they mean. 720 and above is excellent. 680 to 720, great. 620 to 680 is good. 580 to 620 is fair. And 580 below does need some work. We lend down to a 500 credit score on FHA with 10% down. But you won't like the interest rate. Okay. So you want, the higher the credit score, the better the interest rate is going to be. And one thing I want to say that Tanya's going to share the information in the chat. We work with a lady named Amy Klunder. She's with Rising Point Solutions. And she knows a lot about identity theft, but she knows that she can kind of help somebody do kind of credit restoration, if you will, or advice on how to create the score. So if that's information, that's a good partner for us. We also do soft credit pulls. What that means is I'm talking to a customer, they're trying to plan, right? And so maybe the plan is their lease doesn't expire for 6 months, but they kind of want to know where they are today. So they'll do a loan application, and we've had that conversation. And so we'll just do a soft credit pull just so that we can see, is there anything erroneous? It does give us a credit score, but prior to going to underwriting, before we go and underwrite the loan, we will have to do a hard inquiry. But this way it gives us time to prep and prepare. The fact that we do a soft credit pull allows us to kind of get it all in the hopper and give you some advice on how to save and what to do. One of the best questions, and I'm going to have Ben put this in the chat. I always ask this question, and I think it's a great real estate question to ask. How much of your own money are you planning to use towards the purchase of a home? How much of your own money are you planning to use towards the purchase of a home? I cannot tell you how important that question is, because if somebody says, well, I have about $400, that's probably not going to work out. They have to have it. Philip's laughing because it's all his loans that are like that. But that's not going to work out probably, because you've got to have some skin in the game. Even if we create a down payment assistance deal, you've got to have, a roadmap, to help be able to, write a check for earnest money, things like that. And this just talks about credit scores. We have a credit simulator. It's called a what if simulator. We also use another program called Wayfinder. And on that way we can give you at least a map of how can we do if we can do a quick rescore. If we can do a quick rescore and repair the situation, then we will. But it's just, if it's something beyond the scope and there's a lot more work to do, then we will refer it to Amy. Do you know your score? So this just gives you a QR code to check it. You can also go to ftc.gov or annualcreditreport.com. I can go back to that too if anybody needs that, or we could put those in the chat. What makes up your mortgage payment? I talked about this earlier. Principal, the amount of money that's paid, or the amount of money excluding the interest, the percentage charged for the use of the borrowed money. The taxes are based on the property value and decided on by the municipality. Homeowners insurance or mortgage insurance premium. If you don't have 20% down, if you're doing FHA or you don't have 20% down, you're going to have a mortgage insurance premium. You won't have a mortgage insurance premium if we're doing a VA loan, because that is allowed at 100% financing as long as your debt to income ratio will allow it. But that's what makes up the mortgage payment: principal, interest, taxes, and insurance. Where will the money come from to purchase your home? These are a couple of things that I want to give you guys some insight on. The checking and savings accounts. One thing with checking and savings accounts is that we have to source the cash. We have to source where they are. You don't want to have large deposits that we can't, of cash that we can't source. You can have gift funds. If you've got, I've talked to many people, young people in their 20s, where they've said, I can have a big wedding or my dad will gift me money to buy a home. And you know what I say? Go buy a house, go buy a house. And that is a great investment. So you can have gift funds from a relative or a friend, a 401k loan. I talked to a customer today, and he is getting some money from his 401k. It's a loan and it's not considered a liability or a debt because you're borrowing against your own money. You can sometimes get a 401k loan with no, it's like a hardship loan. If you're purchasing a home, there's no cost to you. Cash value of life insurance. Sometimes parents will buy life insurance policies for young children, and they're not real big policies. They're just emergency policies, and they don't have much value so many years later. And so if there's a life insurance policy, someone wants to cash that policy in for the cash value of the policy, they can. I'm going to be careful talking about life insurance because I've had other people go, oh, just off the person, use the life insurance. That's not what I'm saying. So the sale of personal property. Tanya and I are working with a customer right now who had a motorcycle to sell so that they would have enough cash to close. And when you sell something, we had another deal that funded today, Malcolm, who had had a large deposit because he had sold a car, and it was $6,400. Well, we have to source that. So we had to have a bill of sale. We have to know it has value, that, the way that it valued what it said it did, if you're not trying to get a mortgage loan, none of that's a big deal, but you're in the middle of a mortgage loan, we have to source it. You may look and see if there's employer assistant programs, because sometimes there is. IRS tax refund. We love, when you file your taxes in the spring, because take the tax refund, put it away. A second job. On a second job or a part-time job, we can't count the income unless you've had that part-time income for 2 full years, but we can surely, count that. You can put that money aside and we can count that towards closing your cash to close. A mortgage credit certificate. A mortgage credit certificate is a tax liability credit. And it is a phenomenal program. It's not necessarily create cash, but what it can do, if somebody qualifies for a mortgage credit certificate, I'm able to add the income of what that would be as the tax liability and improve the debt to income ratio. And then the last thing I want to talk about is down payment assistance programs. There are all kinds of programs. There are city programs. There is all kinds of state programs. I serve on the advisory council for TSHAC, Texas State Affordable Housing Corporation. I teach that class. And we love that program because with the TSHAC, the down payment assistance for that program, all you have to have is a 620 credit score, and you just can't exceed the income limit for the county that you're purchasing. Ben's going to give you a link that is going to be for T-Shack, and it's ready to buy a home link, and it gives you there's an eligibility quiz. So if you guys want to see if you're eligible, or if you have a customer, if you're a realtor and you have a customer and you want to see if they're eligible, you could either fill it out for them. It takes 5 minutes. But we love this program, and I've used it. Ben's used it. Philip, I think we have phenomenal stories using the T-Shack program. It's very simple and straightforward. They have a heroes program. You can be a teacher, police, firefighter, or you just a regular person. Like I said, you don't have to be a first-time home buyer as long as you have a 620 credit score or better, and you don't exceed the income limit for the county that you're buying in. Right now, the balance of the state is over $100,000 in income. So one of the questions I ask is, do you make more or less than $100,000 a year? So if they say, well, I make less than 100,000, then I know it doesn't matter what county they're going to buy in. Are we doing okay? Any questions? We digital mortgage. Thanks, Latasha, for giving me the thumbs up. I love that. So your digital mortgage, you can apply online from your phone. We give you a link, and that allows you to apply online. We run cost analysis, and also that digital mobile app that we have gives you a calculator, sets your own expectations, gives you loan status updates as we're going through the process, and it's a secure location and it's encrypted, so you can update certain documents. And we try to not only ask for the things that we need. We don't want to over document. These are other loan programs we do: Home Ready, Home Possible, again, FHA, USDA, conventional, down payment assistance, and renovation loans. I like to talk about VA for a quick second. I'm amazed at the number of people, of previous veterans, that are eligible to use a VA loan that don't use it because they think doing government loans are hard. And Philip's got an example. I can see him nodding his head. I'd like for him to speak a little bit about it.
There's been so many misconceptions about this loan program. And back when I first got in the business, it was a little harder to get a VA loan closed. But things have gotten so much easier on this. I think many veterans have been steered by their realtor or by another lender that doesn't offer VA loans to go with a different loan program. It's unfortunate because this is a tremendous benefit program for the veteran. They deserve this, and we need to encourage that veteran to use their benefits. I got a statistic. I've done some research on this, and from Veterans Affairs, it said that 80% of veterans own homes, but only 18% of veterans have used their home loan benefits. I thought that was a very surprising statistic.
It's
crazy.
I
think that we need to know that. Yes.
Yeah. That's and these are people that are, freedom isn't free, folks, and it's 100% financing. There's no mortgage insurance premium. There's no cash reserve requirement. It's not like you have to have 6 months of cash reserves. It's a reduced cost if they're disabled. In February, I closed on a loan with 100% disabled veteran, and got the documentation so I wouldn't have to collect property taxes because his property taxes would be waived. He wouldn't have to have property taxes. And that meant that his cash to close was a whole lot better because I wasn't collecting that as escrows. Now, we did escrow insurance, but not any property taxes. So it's really important to work with people that know VA loans. We just got a VA loan contract, Tanya and I, and we're working on that. And by the way, on VA loans, if somebody tells you, oh man, they're hard, it takes 60 days to close them, simply not true. Karita and I closed a loan for Billy Bramlett. I'll never forget him. And we sat at the closing table, and I don't even know how old Billy was at that time. And he has now since passed away, but he was sitting at the closing table and he looked across that table at me and Karita, because I'm the one that talked him into it. I'm like, why aren't you using your VA benefits? And he used his VA benefits, and it was an amazing story. But we did sit at the closing table, and he said, listen, I don't want to tell you your business, but I'm probably not going to live another 30 years. And you did a 30-year fixed loan on me, And I said, well, Billy, we can't judge how long you're going to live because that would be discrimination. So we're here to help you get into this home. And it was an amazing experience. And I'm so glad we were part of that, because it meant the world when he passed. It was a benefit to the family after the fact. USDA is a rural area. It's 100% financing in rural areas. Now with USDA loans, of all the loans that we do, I would say on a USDA loan that it is better to have 45 days. That's my truth on that. Single unit home, it can be used for existing homes. It needs to be in an approved area. So if you think, I've got a lady, Ashley, that we just got a contract on, and she wanted a USDA loan. Well, nothing that she looked at was in a USDA approved area. So I can't make a USDA loan if it's not an approved area. It must be your primary resident and has to fall within certain income requirements. An FHA loan is the most common loan used really for first-time home buyers that have either thin credit, not a lot of trade lines, or they might maybe have some bumps in the road. You know, maybe their credit score is below 700 and the debt to income ratio is high. On the debt to income ratio, real quick, I'm just going to tell y'all, we calculate the monthly obligated debt divided by income, including the new mortgage payment. And that's how we get that number. And so when you get a debt to income ratio that starts going above like 43 or 45%, you know, usually sometimes FHA is more likely to approve. And as it relates to VA loans, we may even have a debt to income ratio of 55% and it'll still approve. Okay. But FHA, purchase, refinance, renovation, less restrictive on certain credit requirements. Gift funds are allowed, and you can have up to 6% seller contribution on VA. Conventional, you only have to put down 3% on a conventional loan. I was doing a presentation for communities and schools of the Dallas region, and I was standing there with all these people, several hundred people in the room, and I asked the question. It was a multiple choice question, and I said, what is the minimum down payment for conventional? And 80% of the room, Ben was standing there, 80% of the room said 20%, that they had not purchased a home because they needed 20%. Folks, that's just education. People don't know because they read media, they read something else. You don't have to have 20% to purchase or use conventional. You can get it with a 3% down. It can be used for, like I said, primary residence. Second homes are investment, but we're speaking mostly for primary residence at this point. If you're putting down less than 20%, you do have to have mortgage insurance premium, but it is canceled, you know, once you have that 20% equity. Renovation, home style, purchase plus. This is just speaking to what I spoke to earlier on renovation loans. Okay, so I'm going to do this do's and don'ts real quick. We're starting to get to the end here. So if you have questions, make sure you put it in the chat. We do want you to ask questions. We do want you to let us know if you have employment changes in the middle of the transaction. That's not a good thing. Don't change jobs. Don't get mad at your boss in the middle of the transaction and quit. Latasha's laughing because she knows people do that, right? Today, this happened to me today. I've had a pre-qualified customer. His name is Todd Smith. I love him. He's a repeat customer. Ben knows who he is. And guess what he did? He went and got married. And we have him approved as an FHA loan. And so today he snuck it out. Oh, by the way, I got married. I'm like, Todd, now that you are that's awesome. But now that you've gotten married on an FHA loan, it's household debt. Even if it's a non-purchasing spouse and we're not going to count that person's income, it doesn't matter. It's household debt. So now guess what I have to do? I got to run her credit. And so I didn't give you that piece of news today. That was exciting. So you don't want to change your marital status in the middle of a mortgage situation. And I had another deal where it was Karita's customer, where I showed up to the closing and he had never mentioned a wife the entire time. Do you remember that guy? He had never mentioned a wife the entire time. And then at the end, he showed up at closing, and they put a closing document in front of you saying you're so-and-so, you're a single man. And he's like, well, I am married. Well, I had never created the loan like that. And his comment was, yeah, but I wasn't married in this country. Well, in Texas, it's a community property state. So you're married, you're a married man. So it's a community property state. Everybody gets 50%. So on the don't side, don't change jobs, don't make major purchases, don't deposit undocumented funds. We just had this. We closed on a loan Monday. It took us longer than it should have because he had funds that we had challenging to document. The other thing that happened, and I'm going to say this to people that are working with people that are older borrowers, okay, older, born before 1980, okay, older, I'm old too, but we had this customer that we closed the loan on yesterday, and his wife got, some type of scam, and she took out $15,000 in the middle of this transaction. She took $15,000 out of the bank, and then the husband came back the next day, realized what she'd done, got the cash, and put it back in. So now we have a deposit in the bank of $15,000 of cash. And it was like within a 2-day period. So it took me a minute to figure out they took out that cash, but they put back in their same cash. And that was, I was very happy that I had a good relationship with Austin Bank. And Austin Bank was able to help me figure it all out. And we were able to kind of figure that out. But you got to be careful. You want to talk to people when you're working with them. It doesn't matter their age, but you want to talk to them to make sure when you're in a transaction that they know. No major purchases. We had a customer on Friday. We were clear to close. And he's like, can I go buy a car this weekend? No, you cannot. And Philip just had a transaction that I still don't know how he got that closed. And in the middle of the mortgage transaction, they bought a car, and the car payment was how much?
Like $920. And these were kind of lower income people. Yeah.
A $900 car payment. So in the middle of a mortgage transaction. So you can imagine how crazy that was. So just don't do it. Don't get by the way, if you get a credit card advance on your credit card to pay your earnest money, guess what I then have to do? I have to count it as debt. A credit card advance is not acceptable either. And then don't change your closing date. And the last thing is that when you go to closing, I always like for Ben to share the story about the shoebox.
Oh yeah. Yeah. I had a gentleman who was a childhood, still great friends, was in our wedding, his brother, but his older brother bought a condo in Dallas, and he showed up with $23,000 at closing in a shoebox. And the title company is not going to accept 23 grand in a shoebox. And I'm like, James, man, you gotta go get a cashier's check. He's like, from the bank? I'm like, yeah, that's where you get them, man. He goes, well, if I do that, is the IRS going to know about this money? I said, yep. I said, it's, and he went and got it, and we closed, and he still owns the condo today. But the bottom line is, tell your loan officer everything. We're just like an attorney. We have a fiduciary responsibility to keep all your information private. We're not going to share it with anyone, just like the realtors do, but we need to know. And if you tell us up front, a lot of things that you might have tripped yourself up on, we'll get you through the process, and nobody will ever know but us. But if you just let underwriting figure it out, you're in trouble, or you could be in trouble. We can fix those things sometimes, but there are some things that can get done in underwriting that can't get undone by a good loan officer. So tell your loan officer up front, I started out as an underwriter, and we'll keep you from, getting into those pitfalls.
The documents that we need, we'll never ask for more than we need. We usually get 30 days worth of pay stubs. So if you're biweekly, we're going to ask for 2 pay stubs. If we can pull it up on a what's called a work number and a verification of employment, we'll do that. Bank statements usually the last 2 months. Sometimes we'll go 3 months if we need to. Last 2 years, W-2s and or tax returns. Sometimes we don't need full tax returns. If you're self-employed, we need 2 years worth of tax returns and a current P&L statement, profit and loss statement. If you're getting any dividends, earnings that way, We like to get a photo ID, and we have to have a history of where you've lived in the last 2 years. And we don't have to get a social security card. There are a couple of instances where we've had to do that, especially if you're DACA, and like you weren't, you're allowed to be here, and you have a social security card, but you weren't necessarily born here in the United States. So sometimes we'll get a social security card to match that stuff. And all of that, by the way, can be pulled up into your loan file. Funds to close, they need to be in a liquid account, savings, checking, money market. It's easier. So if you're pulling something from 401k, you want to give yourself enough time to do it. Your loan officer will advise. Mattress money, not allowed. Can't bring mattress money. Not shoebox money either. Non-liquid funds allowed if exercised. You got to gift funds are permitted with most loan programs, but you need to get with the loan officer to navigate the water so you know exactly what you're doing. We like it when you get gift funds. It allows us an opportunity to make it work. I did a podcast on credit, and it's about a half-hour podcast. And this, we, decided a few years ago in Lufkin, Texas, in a conference room, what our core values are. When a Christmas parade was going on outside our door. And our core values are faith and family, accountability, integrity. We're very dependable, and we're committed to the process. My handwriting's not great, but that's kind of our team. And probably sometime tomorrow, I always send out a little video with the link, and I'll send that link for the podcast. I always say, let's be friends. Be friends with us. We're all on LinkedIn. I'm on Facebook, Instagram, LinkedIn, and again, I have several videos on YouTube, StacyLynn Mortgage. So reach out to us, and have questions. Be our friend. I definitely want to be friends with the folks from Arlington. I mean, come on, So, we're here and available to ask and answer questions. That I know they put my information in the chat. I want Philip to put his information in the chat, and Ben to put his information in there if you haven't done it already. I always like to talk about a glossary of terms. I say this to both people buying and also realtors. We all have a habit of saying things that people don't understand, and we need to speak clearly. Don't say DTI, it's debt to income ratio. FHA, Federal Housing Administration. We're loan to value, the value of the home versus how much of the loan that you're doing. And so I like to always share this glossary of terms and kind of give you some insight. And if you would like I will email this glossary. And then I told you guys at the end, 3 years in a row, we have been voted in the top 3 mortgage companies, and 3 years in a row, I've won best mortgage loan banker. And nominations are going on right now until July 3rd. And I would really appreciate your vote. And anybody can vote. And then you end up in the top 3, and then they do regular voting. And I would really, really appreciate it. It would mean a lot to our business, and also it means a lot to the types of programs and teaching and things that we can do. It just means so much. I just can't express it enough. So I'm shamelessly promoting and shamelessly asking for your vote. So if you'll do that. And then I did see your question, Latasha. I can't give you the PowerPoint because compliance, but I can give certain pieces of it, or the recording goes on StacyLynn Mortgage, and it's just because compliance there's numbers in there, and that's just kind of, I don't know. I just do what they tell me. I just work here. So any other questions, or the last word? I'll let Ben and Philip kind of have the last word. I appreciate you put that in the link, the Best of Denton County link.
I just want to know when you switched over to doing what they tell you. That's my only question.
So funny. We also own a lot of URLs. I saw that Philip put in his Lufkin mortgage.com, and I own, and I just typed it wrong. Dang it.
I already put yours in the chat.
Oh, Flower Mound
At
Mortgage.
the beginning.
Okay. So anyway,
I
Flower
did put
Mound.
Flower Mound Mortgage.
I
I
know.
put
I
yours.
was just trying to one up my buddy Philip. So, you know, but yeah, reach out to us. We're here. We can help. Valerie, I know we haven't looked at your face since the very beginning, but if you want, no, she's in the car now. Hello. You're like,
Yeah, I'm in the car.
are you riding with Terrence? Are you in the same
Yeah,
car?
no.
But you know, this doing this class, we typically do this class the second Tuesday of every month. So the next class, I believe, is July 11th. And if I'm looking at the calendar right, no, that's not right. I can't. What date is it?
July 11th is right.
You know, this month on June 11th, I was not feeling well. And, you know, I just love that everybody understood and that we were able to change it to this date. And I looked forward to this date. It energizes me. It just gives me hope. And I'm grateful. And I'm grateful that Tanya was able to get on the call too. We're here to help. And so please convey that, you know, to the people that you're helping or anyone that you have. And I'll get, like I said, I'll give the last word to Ben and Philip.
Thank you for participating in this. You know, we like to bring value. We like to bring value to the clients that we work with, to our realtor partners. We look at you, realtor partners, and we operate in tandem to get that customer to the closing table. So, you know, we're a resource for the customer. You're going to have questions, especially first-time home buyers. Give us a call. We're here to help navigate that process. Realtors, you know, you need a dependable mortgage lender. There are many options out there, but maybe not those that are that great. So consider us. And, you know, we want to help you grow your business. So, you know, additional loan options and these different things we've talked about are ways to grow your business. So let us help you get to the finish line and help you grow your business. And clients, let's help get you in that home.
Saw that you wrote in your chat, Ben.
Yeah, I just said thank you for coming tonight. Please reach out to any of us. Pretty much just echoing what Philip just said. We would love to help anybody out. You know, if you can get one person into a house, you know, as real estate agents and lenders, you know, if it's the first one in the family, you end up with more transactions. You can get that whole family, you know, building wealth for them and their legacy. So we enjoy what we do. We probably talk a little bit too much, but that's a good skill for loan officers. And we'll wear your customers out. The ones that are wearing you out, send them to us, and we'll get them going down the right path. You know, if you just need info, you're looking to buy in 3 years, we'll talk to you today. So thank you for coming again, and we would love to help you out with any part of your business.
And I want to tell everybody happy 4th of July. Thank you for our freedoms and Independence Day.